A stunning study proves it. A benign tax regime is crucial for a good economic environment and result. This is not theory, it is fact. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. The Tax Foundation, one of the world's foremost think tanks concerning tax policy, has just issued its annual State Tax Competitiveness Index. It's an in-depth examination of the tax codes of each of the 50 states. It covers individual income taxes, corporate taxes, sales, use, and excise taxes, property and wealth taxes, and unemployment insurance taxes. The report lays out the correlation between a good tax system and the flow of people moving in and out of a state. Numerous surveys have found that the good states generally do better than the ones with a hostile environment. The top states in this report are Wyoming, South Dakota, and Alaska. No surprise that the top 10 would include Florida, Texas, despite a poor corporate tax ranking, and Tennessee. What is astonishing is that Indiana does so well. While it imposes all of the major taxes, it does so in a simple, reasonable manner. The worst-ranked states, needless to say, are California, New York, New Jersey, and Connecticut. Years ago, New Jersey and Connecticut were tax havens and prospered mightily. Both are gradually becoming these days economic wastelands. The study notes that, quote, New Jersey is hampered by some of the highest property tax burdens in the country, has the highest rate corporate income tax in the country, and has one of the highest rate individual income taxes. Additionally, the state has a particularly aggressive treatment of international income, levies an inheritance tax, and maintains some of the worst structured individual income taxes, end quote. Ouch. No wonder the economic weeds are growing in the Garden State. What makes the study so useful in evaluating a state's tax regime is precisely that it takes into account all parts of the entity's structure. For example, the state of Washington has no personal income tax, nor does it have a corporate income tax. Hooray, you might say, but look more closely, and that state hits hard in other ways. The average combined state and local sales tax is a breathtaking 9.38%, the worst among the country's 50 states. Washington imposes a gross receipts tax, a tax on capital gains, an inheritance tax, and other levies. The evergreen state is turning itself into the parched state when it comes to taxes, and now ranks overall a miserable 45 out of 50 states. The index includes plenty of details, such as rules on tax carry-forwards, depreciating equipment, and the like. It also conveniently gives reforms for each state. This index should be used by every single governor in the country. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and I look forward to being with you soon again.